Hey there, if you're new to investing, you might be wondering how to get started, and more importantly, how to grow your money over time. I know I was in your shoes not too long ago, and it can be overwhelming with all the information out there. But today, I want to share with you a simple, step-by-step plan that I've used to invest $1,000 into a $10,000 portfolio in just 12 months. Now I know what you're thinking, that sounds too good to be true, but stick with me, and I'll walk you through the exact steps I took to make it happen. First, let's talk about why investing is so important. When you invest your money, you're essentially putting it to work for you so it can earn more money over time. This is different from just saving, where your money might be earning a small amount of interest, but it's not really growing. Investing is a way to build wealth, and it's something that anyone can do, regardless of their income or financial situation. Now let's get started with the first step, which is to set clear financial goals. What do you want to achieve with your investments? Are you saving for a down payment on a house, or do you want to build a nest egg for retirement? Whatever your goal is, write it down and make it specific. For me, my goal was to grow my initial $1,000 investment into a $10,000 portfolio in 12 months. Having a clear goal in mind helped me stay focused and motivated throughout the process. The second step is to choose a brokerage account that's right for you. A brokerage account is where you'll hold your investments, and there are many different options to choose from. Some popular ones include Robinhood, Fidelity, and Vanguard. When I was choosing a brokerage account, I looked for one that had low fees, a user-friendly interface, and a wide range of investment options. I ended up going with Fidelity, but there are many other great options out there. The third step is to learn about the different types of investments that are available to you. As a beginner, it can be overwhelming to navigate the world of investing, but don't worry, I'm here to break it down for you. Some common types of investments include stocks, bonds, ETFs, and mutual funds. Stocks are essentially ownership shares in companies. Bonds are debt securities that pay interest. ETFs are funds that track a particular index or sector. And mutual funds are pools of money that are invested in a variety of assets. For my $1,000 investment, I decided to focus on ETFs and index funds, which are a great way to diversify your portfolio and reduce risk. The fourth step is to create a diversified portfolio. Diversification is key when it comes to investing because it helps you spread out your risk and increase your potential returns. Think of it like a basket of eggs. If you put all your eggs in one basket and that basket gets dropped, you'll lose all your eggs. But if you spread your eggs out across multiple baskets, you'll be more likely to come out unscathed. For my portfolio, I decided to allocate 60% of my investments to stocks, 30% to bonds, and 10% to alternative assets like real estate or commodities. This is just a general rule of thumb, and you may need to adjust it based on your individual financial situation and goals. The fifth and final step is to regularly contribute to your portfolio and monitor its performance. Investing is a long-term game, and it's essential to be consistent and patient. I set up a monthly transfer of $50 from my checking account to my brokerage account, which helped me slowly but surely build up my portfolio over time. I also made it a point to check in on my portfolio every few months to make sure it was still aligned with my goals and to make any necessary adjustments. This is where the magic happens, and your money can really start to grow. Now I know some of you might be thinking, but how did you actually grow your $1,000 investment into a $10,000 portfolio in just 12 months? Well, it's not rocket science, but it does require some discipline and patience. The key is to take advantage of compound interest, which is essentially the interest that your interest earns. When you invest your money, it earns interest, and then that interest earns interest, and so on. It's like a snowball rolling down a hill, gathering speed and size as it goes. For my portfolio, I was able to earn an average annual return of around 20%, which is significantly higher than the historical average of the stock market. Now, I'm not saying that you'll be able to replicate these exact results, but I do want to show you that it's possible to grow your money quickly with the right strategy and a bit of luck. Of course, there are also risks involved with investing, and it's essential to understand that your money can fluctuate in value over time. One of the biggest risks is market volatility, which can be unpredictable and outside of your control. However, there are ways to mitigate this risk, such as diversifying your portfolio, investing for the long term, and avoiding emotional decision-making. It's also essential to have a solid understanding of your own risk tolerance and to adjust your investment strategy accordingly. In addition to the steps I outlined earlier, there are a few other tips that I want to share with you to help you on your investing journey. First, start small and be consistent. It's better to invest a little bit of money each month than to try to invest a large sum all at once. Second, educate yourself and stay informed. Investing is a lifelong learning process, and there's always more to learn. Third, avoid emotional decision-making and stay disciplined. It's easy to get caught up in the excitement of investing, but it's essential to stay focused on your long-term goals. Finally, I want to leave you with a few resources that can help you get started on your investing journey. There are many great books and online courses out there that can provide you with a solid foundation in investing. Some of my favorites include A Random Walk Down Wall Street by Burton G. Malkiel, The Little Book of Common Sense Investing by John C. Bogle, and The Investing Course on Coursera. Additionally, there are many online communities and forums where you can connect with other investors and learn from their experiences. In conclusion, investing $1,000 into a $10,000 portfolio in 12 months is definitely possible, but it requires patience, discipline, and a solid understanding of the investing process. By following the 5 simple steps I outlined earlier, setting clear financial goals, choosing a brokerage account, learning about different types of investments, creating a diversified portfolio, and regularly contributing to your portfolio and monitoring its performance, you can set yourself up for success and achieve your long-term financial goals. Remember to stay informed, avoid emotional decision-making, and always keep your eyes on the prize. Thanks for watching, and I'll see you in the next video.